Hello, and welcome to our mini webinar series, Best Practices for Filing Amended Returns, a collaboration between Entertainment Partners and NoticeNinja. I'm your moderator, Amanda Reinecke, COO and co-founder of NoticeNinja. In today's webinar, we have Rebecca Harshberger, Vice President and Practice Lead for Entertainment Partners, along with Rick Pinkerman, CEO and founder of NoticeNinja. They'll detail and review the best practices for filing amended returns. Welcome, Rick and Becky.
Hey, thanks, Amanda. Appreciate that. Yeah, today we're going to be talking about filing amended returns and the exciting things that we need to do and manage to complete those successfully. I'm here with Rebecca Harshberger as well. She's going to give us some really good details about the different things that big corporations deal with when filing amended returns. So first thing we're going to go over here is, let me come over. We're going to talk about the highlights. And these are the things that we're going to talk about today, reasons why different companies get returns. And it's different for service providers and large corporations. We're going to kind of identify that. Obviously, there's types of returns or amended return request types, the types of information that you're going to need to gather. We're going to go review that information. We're also going to talk about the timing, because a lot of timing, is involved, and it's not only timing of processes, but like what time of year are you filing these amended returns? We're going to talk about that. Documenting the details. I think we can both talk about the details matter and making sure you catch everything, because you don't want to have to come back and redo it. Closing the amended return. A lot of people don't think about that, but we're going to talk about that and touch about the importance of making sure we've closed it and we've validated and verified everything's resolved. And then once we kind of review that, the last thing we're going to talk about is a little bit about NoticeNinja and how we help our clients manage amended returns, the processes, the documents, the communications back and forth, basically everything that we're going to talk about filing amended returns. So with that, I'm going to come over and I'm going to send it over to Rebecca to kind of talk about some reasons that you've been dealing with amended returns.
Yes, and I'll say good morning, everybody on the West Coast, and good afternoon to everybody on the East Coast. I think the biggest thing that we see with an amended return is an adjustment that is done to payroll, right? It's either somebody's paycheck was incorrect, somebody's paycheck was lost and you reissued it and it crossed quarters, maybe you keyed it wrong. Any number of things can affect both the taxable wages that you reported, as well as the personal income tax that you reported. And of course, there's also state unemployment insurance that gets affected. And in many states, that's a completely separate return. So we see the classic amendment coming from incorrect tax liability, from you've moved taxable wages. During the pandemic, we've seen a ton of that with people kind of saying after they've moved to a new state and they've been there for 3 or 4 or longer months, wanting their payroll corrected to their new resident state. And then if you're handling things in-house, you could have fat fingered a number on the return or overcorrected by mistake. And so those are all the things that happen internally. Externally, someone could apply for unemployment. You never knew that they moved. They applied in their new resident state. And now you're getting a notice saying, hey, tell us about this employee that you never reported here. Potentially manual checks got reported by another department. You had to record information from accounts payable to new hires. Any number of things could be the reason for that amended return.
Yeah, what we're also seeing now is these people are jumping from different state to state, and their benefits are different. And some of these new companies that never had someone in those states are setting up the benefits incorrectly. So the taxability, what you led before, is a taxability issue. And what we're going to see is, I think, a lot more of that flushing out next year when people said, oh, I worked here and I went to medical center there and I got, these kind of things happening. So yeah, there's a lot of reasons for amended returns, and these are just few of them. I'm sure our audience probably has even more reasons why they filed other ones. Let's go in and talk about where do amendments originate from, right? And we kind of touched a little bit about it in the last scene, but we're going to kind of really drill down into some more deep items here, so people can kind of see things that we've seen or are common options or practice in the amended return filing.
Yeah, I think the biggest one for 2021 has been states that continuously have changed their state unemployment insurance tax rates. Initially, states calculated your unemployment rate potentially inclusive of COVID claims. And then they removed those COVID claims and gave you a new rate halfway through the year. And so now your first return was either over or underpaid. You also had the situation where a state may issue a higher rate later on in the year, retroactive to January the 1st. We saw that with Massachusetts. People screamed bloody murder, and then Massachusetts changed their mind again and sent you a new rate notice. So we're starting to see a lot of that. We also know that we're going to see the same thing in 2022, with states taking longer to give us a state unemployment insurance tax rate. So maybe in the first quarter, we pay at the incorrect rate. We could also miss an increase in a wage base or use the wrong wage base. Some states now have 2 wage bases for smaller employers and one for larger employers. Illinois does that.
Yeah, those thresholds really kind of, they get people a lot of times.
Yep. And I think the biggest thing we'll see for amendments back to 2021 are those W-2Cs. We're going to still have a tremendous number of people who are perking up when they come to do their taxes and they realize, hey, I've been living in a Florida or a Texas, a state with no income taxes, and I've continued to pay withholding from where I used to live in 2021. And now I want my company to amend my W-2 so that I can get part of those taxes back, since half of my work was in a state with no taxes. Yeah. So,
and that's going to come into the other forms, the 1095Cs and other types. I mean, that's just kind of that first picture that we have of snow, spider or of a Superman underneath all those forms. That's what happens. You start amending one of those things, and it's another form, and then another form that you have to file.
It's true. And then we're not even talking about just the basic nexus questionnaires that could affect all other parts of your organization. So I think the other thing we're going to see a lot of continuously is that independent contractor who applied for unemployment benefits insisted that they worked for you, that they were not an independent contractor, and reclassifying them as an employee. And that's going to trigger some amendments as well. So, so there's all kinds of reasons for amended returns. And keep in mind that state agencies are having trouble processing, just like we are having trouble, because they're all working remotely. Some of them have gone back, some of them have not. So as you file your amended return, it could be that the state won't process it for a while. And then what happens? The state's on an automated cycle. They'll send you another notice.
Yep.
And it may or may not have the exact same amount on it as the first notice. So you may have to do the complete research, never realizing, oh, they just haven't seen my correction for this one. And now it's a different amount. So there's a snowball effect that happens once a notice starts. You take the time to research it. While you're researching it, the state could send you another notice with more interest and penalty on it. And now you're confused as to, well, is that related to this one, or is this a whole new one?
Right. And those are hard to balance too, because, those are the ones the agency sees that, hey, this rate wasn't calculated correctly. Yeah. Right. So they know those ones. And then the ones that, oh, you know what, we didn't calculate that correctly. The agency doesn't even know that yet. So it's tough to manage all of those and the processes that go along with it, because they're a little bit different, even though it's the same type of thing there.
We focused a lot on states, but the feds, the IRS is really struggling right now with amendments, and they're way behind. Yeah. So we probably haven't even seen the 4 quarters of 2020 match to the W-3 yet. So we could still see some federal notices coming in from 2020 with mismatches on our 4 quarters of 941s. And we all, we know at EP and through the American Payroll Association that the amended returns that you filed for 2020 941s have yet to be processed for the ERC.
Yeah.
So, so the feds are just as hung up as the states are in many ways.
Yeah,
Uh,
it really has. It's
Still
put a
adjusting.
delay in all
Yeah.
of those processing at the federal and state agencies. So it's tough. So, okay, let's go to the next slide. And we're really just talking about where's the information. This is triggered by external notices or by internal research. In NoticeNinja, we have a basic option to be able to track this. A lot of companies, they just kind of track it with notes or in Excel spreadsheet and say, oh, it's this year, it's this quarter, that quarter, this quarter. Being able to track that stuff in a good visualized way and be able to report off it is really important, especially because what we're talking about is these timing, right? And amended return could take now 9 months to even a year to process. I mean, we had an amended return for our personal company that we did, and it took around 11 months to get that process from the agency. So
the other thing you'll start to see, we saw this during the Great Recession in 2010 and 2011, is that a state will agree with you and say, yes, we believe we owe you this refund, but we don't have any money right now. So here's an IOU, and when we have money, we'll send it to you. And
a lot of credit balances.
That happened in quite a few states
in
2010. So as states struggle to deal with COVID and the lack of revenue due to COVID shutdowns, you might see states do that again, and then you're tracking an IOU.
Yeah, we're seeing a lot of that right now in the system, a lot of credit balance notifications saying, you've got a credit balance on here and we'll let you know how we'll apply it or how we'll refund you at a later time.
Yeah, and they, in that case in 2010 and 2011, they wouldn't let you apply it to a future quarter. They're like, no, you need to keep paying us.
Yeah, no, it just accrues. Yeah, your credit balance just accrues. Yeah, so it's really interesting. Yeah. But these are obviously the details that you need to track on your amended return, and that basically comes into your timing is everything. Right. And we were talking about that a little bit. We've talked a little bit about, how long it's taking the agencies to process and those kind of things. But there's also other type of timing as well. When are you going to actually do a amended return? Right. When did you identify or when do you need to file? I know at the service bureaus, at the payroll companies and stuff, they're filing as needed. They have usually 3 blackout dates, right, where they can take the request in, but they don't process it until after quarter end. And then after they've done their filing, then they process it. Large corporations, they do it a little bit differently just because they're not doing a huge volume like these payroll processors. Can you talk a little bit about different strategies that you've used or seen?
Yeah. So we got ourselves into a pickle a couple of years ago, and we figured out we had about 500 amended returns that needed to be filed. And we figured out that those 500 amended returns amounted to over $1 million. So we hired 4 or 5, was it 5 interns in the summer, because that's when it's quiet. That's when states have the time to process. So we hired 5 interns for 8 weeks. We taught them how to do amended returns, and they churned them out in 8 weeks. Wow. And we collected all the money by the end of September. So if you have a high volume of amended returns that need to be filed, and this was due to a massive reorganization of the company, then pile them all up in the summer, hire some interns, and it's so easy to show the return on investment, especially if you hire interns instead of temps, because I think we paid them between $12 and $15 an hour. But it was just an amazing return on investment and certainly a great experience for them and something really cool to put on their resume. Yeah. So the last point that I would make about amended returns is you do not want to stack them up. Back 20 years ago, we would actually file the original return with the amended return and stamp. Remember the old red stamps that said copy on them? We would stamp copy and be able to show, because of a lack of automation at the state agencies, this was our original return. Here's a copy of it with the amendment. And now here's the amended return. So now states don't need that anymore. They just need your amendment and a really good letter to say, hey, this is what happened. Here's the amendment. Here are the places on the amendment. Now, you can also file amendments electronically. And when you do that, then no letter required, but you do want to make sure there's a phone number on there where they get an actual person to talk to, because they may want to call you. So you don't want to use that generic phone number on an amended return. You actually want to use a phone number where someone's going to pick up the line and talk to them. And know too, if you're like me, I'm West Coast. So we've got folks that start at 6 in the morning. So that if an East Coast, company, an East Coast state agency calls us at 6 in the morning, and they do, they even call earlier than that, we have someone starting early so they can answer that phone call. And that's the person that handles our East Coast states. So it's not just timing, time of year, but time of day matters as well.
Absolutely. That's a big deal. You're just trying to communicate with the agencies right now. It's a true strategy you have to have, because you just try to give them a call. It doesn't work out so great right now. So yeah, there's a lot of timing things. And another thing is I know we talked about, like, if you're in your first quarter and you need to file, or second quarter, you need to file a amended return for a previous year. Sometimes you want to hold off until like the end of the year or a certain time to file that amended return for a previous year adjustment as well. We talked about that a little bit.
Absolutely. So we look at it like we want to get our W-2s out. We want them as perfect as possible. If we know that amendment is going to create a W-2C, we're going to hold. We're going to hold that amendment until we know we have the W-2C ready and the amended return ready at the same time, the 941X in this case. So I think that's where sometimes people, especially with the IRS, trip up a little bit. They file that amended return a little bit too early, and then the IRS uses it, and now your W-3 is out of whack because you haven't really looked at all of your 941Xs and calculated that into your W-3. So it can be really tricky to get ahead of your W-2s. So you want to stay behind your W-2s with your amended federal returns, and kind of the same for the state returns. So I know oftentimes in payroll tax, we think quarter by quarter. We're very quarterly focused, whereas in payroll, they're pay period focused. Right. Every 2 weeks, I have this routine. So it's the same with payroll taxes. Every quarter, I have the same routine. But we can never lose sight of that annual W-2, because that's the only true up that matters at the end of the year. So if the adjustment I'm making is going to affect a W-2, I need to be very conscious of the timing of that, especially after the year is over.
And especially when you're moving wages too. When you're moving, you're pulling wages from one state that they hired incorrectly and putting them into the other state. We want to make sure that those are all affected first before that W-2 goes out, for sure.
And the other problem that we see these days, Rick, is that the state agencies won't give the money back. They'll say, well, that's nice that they moved, and you can move the taxable wages, but you can't move the withholding.
Right.
So the individual now is in a position where they've got to file that amended return, and then in their new state, they've got to do an estimated tax payment so that they don't get penalized.
Right.
And they don't have the money for it because they haven't gotten the money back
right.
from the excess withholding over here. So there's a very fine line. Again, it goes back to that timing. When are you gonna really make these changes, and when is it most beneficial to not only the company but the individual? What is your timing?
Yep, that's it. Now let's talk about how we can do things to help improve the agency process this, right? And we've touched a bit about it in the timing thing, right? Making sure we don't overfile, file double, stack the filing. Those are definitely things that can help. Filling out the forms. I mean, you talked about, it's great to be able to e-file and be able to do adjustments online, but that's not, we're really just talking IRS really, and maybe a couple states.
Mm-hmm.
So a lot of that stuff, definitely, if you can file online, anything on file online definitely helps the agencies, right? Because they're set up for that.
Yeah. I think the biggest problem with file online is you've got to take a screenshot of what you filed.
Yeah.
That is the problem with filing online. If you forget to take a screenshot and you're just working off of your notes, if you fat fingered something, you have no way of knowing that. So,
yes.
So be careful when you file online, take a screenshot along the way. And then
Make
you've got
sure
to
you
have,
read the details of that screen too,
yeah,
because sometimes there's some detailed message in there. Oh, your file didn't get uploaded correctly. Please resubmit.
yeah.
I had that in my payroll company, and we didn't submit, I think it was like 400,000 W-2s. And we didn't find out about it until we got notified by the agency. So yeah, and thank God we had the print screen, and we looked at the print screen like, well, at the bottom of the thing, it had this little small thing that didn't get uploaded. It said verified, but usually it says verified and incomplete. And
Yeah.
this one just said verify. So my tax person took the print and said, it worked. And then we looked at the fine print and it said, yeah, it verified, but it didn't upload the file. So.
And you bring up a great point, is that once you filed that amended return, you kind of want to hold and wait and make sure before you file another amended return, because we are starting to see companies, especially ours, we have multiple amended returns and we're just in a holding pattern. Once you file one amended return with a state or federal agency, stop, don't file another one until that one is completely processed. And that's what's frustrating a lot of people right now with the IRS. They haven't quite finished processing all of the amendments that they got for 2020. They have projected that they will be finished with those by mid-December. So that's exciting news in case you haven't heard that, mid-December for your 941Xs for 2020. But I think the biggest thing is putting yourself on a ticker system so that you're contacting the agency every 3 to 4 weeks to say, hey, did you process this? Did you process this? Did you process this? And then if they have a problem, you're in that cadence of talking to them. They know you and they may say, oh, you know what? We just looked at it. You're missing this one piece of information. Just send it over to me. And everything by the states is still sadly done on fax. It's very hard for the states to get an email from us. So that is very difficult for those of us that are still working from home to send state agencies a fax to fix something quickly.
Yeah, that is tough. A lot of our clients still deal with a lot of fax. I mean, that's in the tax and payroll world, faxes are still very important. So absolutely. Well, great. That's great on the improving the processes. Anything we can do to help the agencies process our stuff correctly, that's what we want, right? Because reduce that percentage of them making a mistake after the fact. So
you bring up a great point, Rick. It's that second pair of eyes that makes all the difference. Anybody new in the payroll tax department, we call them the new second pair of eyes. So as we're filling out that amended return, we're going to give it to that newer person and say, look at this. Did I fill it out correctly? Am I missing anything? And it's really funny because even the people that have 25 years of experience skip over a question, and that can delay your processing. So yes, someone with 20 years of experience goes on automatic pilot. They've done it a million times. They're going to fill it out, no problem. But nobody's perfect. It's still human error. And having somebody else look at it also gives them that skill and the training. And it helps reinforce in their mind that every little thing counts. Every little detail counts.
That's a fact. And it really is. In this industry, in the tax, everything counts.
Yeah, I think the other issue is people embrace the speed idea instead of the perfect idea. And they think they're rated by their employer by the number that they process versus the number that they process accurately. And they get caught in the speed trap. With amended returns, accuracy is critical. If you file an amended return and it's got an error on it, your credibility is just gone.
Yeah.
It really is. So it's going to be tougher when you file that second amendment to get interest and penalty waived.
Yeah, it really is. And it comes down to next slide. So documentation is the key, right? Making sure you document everything and validate and verify. Within NoticeNinja, we've got workflows and tasks that allow our users to basically verify and validate all the different processes and tasks that need to be completed depending on the amended return type, right? If it's a 1095, 1095C, W-2, W-2 reprocess, or if it's a C, whatever it might be, there's different tasks that have to be followed and documenting that.
Yeah, it's the documentation, Rick, that's so fantastic, is that we can actually put the documentation right in to NoticeNinja.
Mhm.
and it's attached to the item. So that second pair of eyes is 10 times easier. And when we're talking to a state agency, we're not, shuffling through an Excel spreadsheet and then going to a folder. We're going straight into NoticeNinja and we're seeing everything we need right in front of us. And it's reminding us to get the person's name that we're talking to, get their phone number, and having a place to store it. That has become incredibly beneficial to us.
Yeah, and the template letters are obviously huge to be able to, homogenize and standardize your communication back and forth.
Yeah.
So, and that whole thing about scalability is great as long as it's consistently accurate scalability, right? That's what we want. We want to be able to scale at accuracy. And that's what documentation is key for us.
Yeah, absolutely.
Let's talk about closing out the amended return, making sure that there's nothing else and that we're basically done. I know in the payroll processing, companies, they validate, they send copies to their clients, they get verification is done correctly. And then when the agency sends them the forms, they document that and put it in the files, and they hold that for their 7-year time frame to make sure that they can have it as needed. Is there anything special that large corporations need to do to close out amended return, especially when you're talking about stacking, right? Because there's a lot of different issues you need to deal with or think about.
So everybody has their own interpretation of the word done. That's the problem. True. And so at Entertainment Partners, we have an ongoing joke. We say, is it done? Is it done? Or is it done? And so when we're talking about really closing out anything, not just amended returns, but our joke is, today people tell their management all the time, it's done. Like, we have killed it. It is done. Nothing else to do here, nothing to see here, moving on to the next thing. So I think that's the problem. Without a process like NoticeNinja to take a look at, you can't really check to see if it's done. You have to take somebody at their word and hope that their interpretation of done is the same as yours. And our where this stemmed from was, are you done with your amended returns? Yes. Well, actually, they were done with them, but they weren't in an envelope yet, and they hadn't gone all the way into the mail. So they sat on someone's desk for 2 more days, but they were done. And so that all taught us, you know what? We really need to have a uniform understanding. And so our joke is it done? And that means it's actually like completed. We've checked back with the state agency. They got it. They processed it. And we have, we're no longer out of balance.
Yeah. And that's the validation verification, making sure that it's been, the T's have been crossed, the I's dotted, and everything's been taken care of. A lot of that comes in the verification up front, right? Because making sure you do the steps up front allows you to verify at the very end correctly. Because the last thing you want to hear is, oh, Becky, I forgot to tell you that one manual check.
Yeah. And the other thing is there's the state kind of cascades sometimes. So, your error from the first quarter affected the second quarter. Like when you made your second quarter payment, they made a stole money from it and paid it to what they thought was the problem in the first quarter. So you've paid the first quarter now. You fixed it. Now there's too much money in the first quarter because the state swiped money from the second quarter. So it's not done yet, because you've got to go back to the state and say, hey, you state agency need to put that money back that you swiped from the second quarter, put it back on the second quarter.
And that's going to come from a notice that they sent you that they moved wages. So you're going to reply back to that, and it's going to be linked to the amended return, but not really.
And that's why I say you have to really understand from the state, are you at zero balance? Because in that case, you would have been overpaid in Q1 and still underpaid in Q2.
Yeah. Well, and last but not least is the last screen is about how NoticeNinja manages amended returns. A lot of stuff that we talked about today, that's all in NoticeNinja. We create tasks, we create automated workflows, so clients can truly track everything regarding any type of amended return, where it's at, how long it's been there, what processes are next, and even verifying, did we close it correctly? Did we send, pay the correct amounts? Did we get the refunds? So a lot of that details are in the system. Once you have it in there, it's easy to track. It allows the staff to look at the dashboards, run reports, and basically look back periods as well to see how things are going. So with a standardized system, it truly helps. And Rebecca, you can kind of explain that a little bit with your notices and how it helps you really control a lot of the stuff that was, I guess, out of control at some point.
Yeah, it definitely was. We knew when we started with ants back in, I think it was actually 2012. And the problem that we had is we knew we had a reorganization coming up, and we knew we were going to have a tremendous amount of notices coming in just because of the reorganization, not even thinking about amended returns. But more than anything, what we found was critically important, and we're a privately held company, we're not public, but very, very important to our clients was Deloitte coming in, our auditors coming in and auditing our payroll tax returns quarterly. It was very important to our clients that we were compliant with payroll taxes. And so being able to show the auditors a methodology of tracking all of our amendments became a critical part of the partnership in qualifying entertainment partners to being completely in control and visible to exactly where we were in the payroll tax process. So the other thing I would say is if you are a publicly traded company and you do have a large outstanding amount like an ERC credit, which many companies still have, your big four CPA firm is going to want to understand, how are you tracking that credit? How visible is it? If you had turnover in your department, does anybody know about that expected amount coming in from the IRS? If it's big enough, it is something that has to be tracked in such a way that your finance director and your controller know about it and also are tracking it. So it's just one of the small areas that we never thought was going to be a big bonus to having this partnership with NoticeNinja, is that our auditors come in, we can run reports for them, they can match them against what we're saying is in the general ledger, everybody's happy. So it's just one less thing to have to explain to an auditor or dig out for an auditor, and it just shows your company is really on top of everything related to the general ledger, because it's not just a payroll tax. You know, the biggest number on most general ledgers is what? It's payroll and payroll taxes. It really is. Yeah. So being able to track these at a larger corporation, critical to being really a true partner with your CPA firm.
Yeah, thanks for that. Absolutely. It is compliance. It always comes down to compliance and making sure, everything's in where it should be. So, well, I'm sorry, let me go here. Oops. I think that's the end of the, oops. I was trying to get to the end of it. I believe that's the end of it.
Rick, we have a question here in the Q&A that I'm just going to ask, and I'm hoping that you or Becky can address that.
You betcha.
Excellent. So what happens if you have numerous W-2Cs? What is the best practice to file the amended returns when you have many at different times during the first quarter?
Oh, I love this question. I'm gonna take it. We are shameful at Entertainment Partners. We hold off on filing those amended returns until the third quarter, because you're going to get more. So hold off on your W-2Cs. You can give the employee a copy of the W-2C, even though you haven't filed it yet with the IRS. It's okay to do that. It may sound incongruous in your mind, but it'll take the IRS forever to catch up with it, and the individual can file their tax return. It will not impede their tax return, because those balancing programs are not run until August by the IRS.
Right.
So take a deep breath, give the W-2C to the employee so they can file by February 15th. April 15th, wrong deadline. They can file their taxes by April 15th. You wait until sometime, I would say May is a good month, June a good month, to finally say, all right, let's take all of our W-2Cs. We're going to upload them to SSA, and now we're going to file that 941X inclusive of all.
Yeah, that's good. Good question. Good
Thank
answer.
That was from Jeffrey Rothholz. And I know that there are a couple people on here that I can open it up where the panelists or the attendees can speak if we would like to have a live Q&A, since we're kind of here at the end, and I'll allow each person to talk. If they want to unmute themselves, they are welcome to.
So I do see another comment in there. We have 30 days from the date of discovery of an error to do the amended. And is this not true? Well, technically it's true. You're absolutely right. You do have 30 days, but I have never, in my experience, ever seen anyone, and your 30 days, you could say, yes, I was in compliant. I gave the employee within 30 days their W-2C. When the company actually files those W-2Cs, yes, the IRS does expect that you'll file them within 30 days of finding the error. So technically you are absolutely correct. But in my experience, you can hold off and pile them all up and file them at once without question. The difference between technically perfect and operationally efficient.
There you go. That's great. Okay, I think that's.
I want to give a special thank you to our hosts, Becky and Rick today. We'd also like to thank you for attending. And if you'd like more information about either our products or our services, feel free to visit our website and schedule some time with us at NoticeNinja.com.